And good evening. This is Mottek On Money, doing it live here on 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast too at kbc.com, Apple, iTunes, all your favorite podcast platforms. And we're on the socials too at Frank Mottek on X, formerly known as Twitter and Instagram. Well, coming off the three-day Labor Day holiday weekend with the hot labor summer continuing, stocks kicking off the holiday shortened week with a pullback today. The price of gas and oil taking the spotlight again, with oil hitting a new high for the year and gas prices moving higher here in Southern California. Diesel now averaging $6 a gallon here in the Los Angeles area as of today. Looks like $5.40 is the average price for regular and $5.75 the average price for premium. Once again, inflation on full display at Southern California gas pumps. Stocks taking a hit on concerns about the latest readings on factory orders, showing the first drop in months and more weak economic readings from China and Europe, along with new inflation worries. The Dow coming in for a closing loss of nearly 200 points. The S&P 500 ended down at 19 points. The Nasdaq gave back 11 points. Investors coming back from the Labor Day holiday weekend in generally a risk-off mood after an upbeat close on Friday, the first trading day of the month of September. We actually had a pretty good week this past week, with the S&P 500 notching its biggest weekly gain since June following that August jobs report that came out. And we're watching what's happening with the hot labor summer continuing. The media stocks back in focus, with Warner Brothers Discovery shares moving slightly higher today after the media company lowered its 2023 financial guidance in light of the continuing strikes by the Writers Guild of America and SAG-AFTRA actors in Hollywood. The company is hopeful the strikes will end soon, but the financial impact could be an estimated $300 million to $500 million impact on full-year adjusted earnings before interest, taxes, depreciation, and amortization, according to a MarketWatch report. Price of gold moving back today, with prices for the latest contracts settling at their lowest in about a week. It looks like gold is hovering around $1,952 an ounce. Price of oil, meanwhile, which I mentioned earlier, is skyrocketing. It looks like Brent crude in London is above $90 a barrel, and the West Texas Intermediate price now close to $87 a barrel in New York. It was a rough day for United Airlines. They had an issue with their computer system. It looks like they had a ground stop declared by the FAA, lasted more than an hour, did not affect aircraft already in flight when it was called. United investigating the cause of the slowdown, but does not believe it is a cybersecurity issue. United stock moved lower today. Coming up later this hour, as always, we'll be standing tall for small businesses, that is, and I'll be speaking live with Chris Pilkerton, who served as administrator of the Small Business Administration under President Trump. He also just co-authored a new book titled Underserved, Harnessing the Principles of Lincoln's Vision for Reconstruction for Today's Forgotten Communities. And what's going on in the car business these days? We'll get right to the lot tonight. We'll find out when I speak live with Phil Airy, Vice President and General Manager at Budget Car Sales and Rental, based here in Southern California in Norwalk. But first, on your money, the markets, the economy, inflation, and the whole works now. Joining us live, Gabriel Wisdom, Money Manager and Managing Director at American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much. Hope you had a great holiday weekend. Thanks for taking the call this evening. And give us your view of things here at the moment.
Well, Frank, September has a very bad reputation as being the worst month of the year, dating back to World War II. And sure enough, August is pretty bad as well, but September has historically been the worst. Now, over the past 15 years, the drop in earnings has been even accelerated to about 3.4%. The second quarter earnings season is now wrapped up. It's in the bag, and it does mark the continuation of an earnings recession. However, things are improving. And the very interesting data that just came out is that earnings estimates for the 500 major companies in America, the S&P 500, which typically drops by about 3% during the first 2 months of a quarter, is on the rise. During July and August, earnings estimates were raised for the third quarter, the fourth quarter, and the remainder of 2023, as well as 2024. Full year ahead. And that is quite notable because earnings are absolutely the most important driver of stock prices. Earnings are what make your business valuable or not. And so earnings are rising at a time when historically earnings recede. So things are looking pretty good, actually, for the longer term.
All right, on the inflation front, looks like that dragon is still rearing its ugly head, especially at the gas pumps here, with oil hitting a new high for the year today, and gas prices continue to soar here, especially in Southern California, way ahead, of course, of the national average price, with that regular close to $6 a gallon here now, and diesel actually at $6 a gallon. What's your view of where that goes from here?
Well, Russia has reduced its exports by some 300,000 barrels per day through the end of the year, and those cuts are in addition to OPEC's reductions that started in November of last year. So there's ongoing upward pressure on crude oil futures. They're up about 25% just in the last, I think, 2.5 months. So, we've got a recession more or less in Europe and certainly in China. But Japan's economic growth has been robust. But what's odd is that during this recession, everybody wants to travel. There's an increase in mobility demand, and that's put upward demand on traditional gas and oil, traditional energy, which I've said for a long time. You don't just stop and go all green. It'd be nice if we could, but that's just not practical, and it's being reflected in these higher energy prices.
On your live with Gabriel Wisdom, we did hear from the big dog on Wall Street today, Goldman Sachs, seeing just a 15% chance that the U.S. will officially fall into a recession over the next 12 months. Looks like they're back in the soft landing camp here. What do you see ahead for this economy?
Frank, in the Jackson Hole speech that was August 25 with the Federal Reserve Chairman Powell, he was very, very hawkish. In other words, he wants rates higher, or he wants inflation to fall toward the Fed's 2% target rate. Right now, we're looking at 4 to 5% inflation, depending on which view you take. This would require the supply of labor to increase at a faster pace than the demand for labor. In other words, there'd be more jobs and more people taking those jobs, and that would be a very soft landing. If you interpret Powell's speech, he doesn't want a recession. He just wants consumers to cool their jets, and that hasn't happened.
Right. What's your view of the Fed's previous calls on recessions? And remember, they were kind of late to the party for the last big one, right? And what can we expect from the Fed on the recession question?
Well, that's been very apparent to all the Fed governors, and I think somewhat embarrassing as well. The Atlanta Fed has an indicator they call the GDP Now tracking model, the gross domestic product now, and that has shown a very strong 5.6%. I mean, that's double what we would expect to see. And leading the way is a 7.2% increase in residential investment. People are buying things, and also strong personal consumption expenditures. The only negative here is the index of leading economic indicators, which peaked in December of 2021. And historically, when the leading economic indicators turn down for a prolonged period of time, there's a lag period, but we do get a recession. So my view is we will have one.
And what's the next move on interest rates? Higher again?
I think they're higher again, but one thing the Federal Reserve is going to be looking at is this $1+ trillion problem in commercial real estate. I mean, even Zoom, the Zoom video communications is ordering all their workers to come back to the office, and they won't. And that's the problem. So it's this silent refusal of workers to come back and work in the office, and that's putting downward pressure on commercial real estate. How that plays out obviously has very significant economic consequences. I saw something here, it might have been in Yahoo Finance, about McKinsey Global Institute's estimates that these shifts could erase as much as $1.3 trillion of real estate value in big cities around the world by 2030. That would include Los Angeles.
Very significant, and we're watching that very, very closely with our commercial real estate folks here, and certainly it also impacts the banks. We've seen those bank failures earlier this year. The bank issues. I guess trying to get away from the word crisis, but do you see more shoes to drop there?
Well, unfortunately, I do. I think they've got to figure out how to make banking more of like in the investment business. Investors can earn more in a brokerage firm money market than they can in a bank deposit account. And the problem for the banks is that they're lending out that money that they're paying more for. They're lending it out at lower rates long term. And so that was the problem for the major banks that failed the first part of the year, and certainly has put pressure on a number of banks that are under credit watch.
On your live with Gabriel Wisdom. And Gabriel, let me ask you at this point, given the setup you just described, where are you putting money now and/or taking it off the table?
Frank, you mentioned the Warner Brothers situation and how the Hollywood strike has hit Warner Brothers revenue for the rest of the year. And also the movie release delays are also hurting the cinema chains like AMC, Cineplex, Cinemark, who are still trying to recover from the COVID-19 situation. But I think the whole media entertainment complex is undervalued now. Today we saw this fight between Disney and Charter Communications, cable provider, and Disney's got all the muscle. They're opting for Hulu Plus as a way to circumvent blackouts on the U.S. Open and other high-profile games and other events, rather than going cable. So, according to the latest data from Nielsen, linear TV viewership, traditional TV viewership, is now dropped below 50% for the first time ever. But the big media conglomerates, they're benefiting because they're going digital in every way possible, and they're very cheap. So I like them all. I also like the banks. I think they're finally on sale. And then there's the semiconductors, chips. China's got a brand new super chip. We'll see what the U.S. has to say about this, but it's twice as fast as the fastest chip that we know of. These are exciting areas for investors.
Right. A week from today, Apple's got their big event expected to unleash the iPhone 15. Apple, of course, has performed quite well this year. What about Apple here?
Well, Apple, just inked a very big long-term deal with SoftBank's ARM, which is going to be going public, ARM, and they make the smartphone chips and components. And I think this is very exciting for Apple. But this new chip breakthrough out of China is likely to be the big talk over the next few months. I think, especially in Washington, they just come up with a phone that is so powerful that it's almost twice as fast as anything that Apple has rolled out, to my knowledge. Now they're using extreme ultraviolet lithography, which Dutch firm ASML manufacturers, and they weren't supposed to be getting this machine. That was part of the problem for China, because there were U.S. sanctions and they couldn't get the machine from ASML, but they found a way to circumvent that. And so this super chip threat, I think, is a concern probably for Apple as well.
All right, we saw a big merger deal today. M&A activity appears to be picking up, as is often the case as the year winds down. In this case, Enbridge buying 3 utilities from Dominion Energy, a $14 billion deal. A Canadian pipeline operator making this announcement, creating North America's largest natural gas provider and doubling its gas distribution business. Any thoughts about this deal and other M&A deals possibly on the horizon?
Well, first of all, I think that's a very smart deal, because natural gas is the natural transition fuel going into the carbon-free world that we envision. But this whole area is going to be stronger for longer. in my view. M&A, I think we're going to see a lot of it in the bank sector because of weakness there. I think we're going to see M&A in media, far more of it. So I expect the biggest deal, though, that we will see will be this ARM from SoftBank. It's not going to be the same size as NVIDIA in terms of market capitalization, but it'll be the largest IPO of the year.
All right. Any thoughts about the Magnificent Seven, which have been performing so well this year? And what about AI names? Anything else? Any other thoughts about what's happening in the AI space?
Well, in terms of the Magnificent Seven, Frank, you're talking about Microsoft, Google, Amazon, Meta or Facebook, NVIDIA, and Salesforce. That would explain 51% of the broad markets, the broad stock market's performance, and 54% of the NASDAQ 100 performance. Now, how sustainable is that? I think we're going to see some distribution, and I think that there'll be some much more interest in just particular industries that benefit from the AI excitement. This would be Cadence technology. Cadence serves 5G, aerospace defense, healthcare, and AI. I like all the semiconductor stocks, as a matter of fact, even those that are doing poorly like Intel, I think for the long term. AI is here to stay. It remains the biggest buzzword of the second and now the third quarter earnings season. So it's pretty exciting, Frank.
All right, that's why we got to start saying more often. One of the biggest buzzwords, AI it is. So thank you very much, Gabriel Wisdom, money manager and managing director at American Money Management, and author of Wisdom on Value Investing. It's always great to speak with you, Gabriel. Thank you very much for taking the call live with us here this evening.
Thank you, Frank.
And we'll check where the action was on Wall Street in just a moment. But first, the latest on your ride right now here on 790 KBC. Friends, I'm not exaggerating when I say this. QC Kinetics can change your life. You can live again without that chronic joint pain and without drugs or surgery. It's Frank Mottek here. QC Kinetics is advanced regenerative medicine. They take your body's own concentrated healing properties and put them right into your joint to restore and repair that damaged tissue that's causing all of that horrible pain. The patient satisfaction reports are absolutely astonishing. Finally, a real alternative to the old ways of dealing with pain. And unlike surgery, there is no downtime with QC treatments. Now, if you have constant pain in your knees, hips, shoulders, or back, you need to call and get a free consultation from the medical professionals at QC Kinetics today. Imagine this autumn moving around pain-free, doing things you love again, walking, hiking, playing with your grandkids, you name it. Call QC Kinetics and see how the latest advances in precision regenerative medicine can attack your pain and bring you lasting relief. QC Kinetics, locations in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. That's 213-997-PAIN. Again, 213-997-PAIN. 790 KBC welcomes, you guessed it, Jackson Browne coming to the Hollywood Pantages Theater October 23rd. Tickets are on sale Friday at Ticketmaster.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call now, 1-888-790-5222. Hopefully you're not running on empty tonight. Gas prices on the rise here in Southern California as the price of oil has hit a new high for the year. Let's take another look at that AAA fuel gauge survey out today for LA gas prices. $5.40 now the average price for regular, $5.75 the average price for premium, $6 a gallon now the average price for diesel in the LA Long Beach area. It looks like we're hitting, well, recent highs certainly for the price of gas here, well off the record highs, fortunately, which we did hit last year. In fact, it was last October that we had a record high for gas here in the Los Angeles area. That record price was $6.44 a gallon for regular. Right now, we're looking at $5.40 a gallon for regular. This as the price of oil is moving higher, up $1.14 today to $86.69 a barrel in New York. Above $90 a barrel in London. Brent crude prices soaring today to a new high for the year, the highest we've seen since last November. The price of gold moving lower, down $14.50 at $1,952 an ounce. The Dow coming in for a closing loss of 196 points today, settling at 34,642. The S&P 500 down 19 at 4,497. And the Nasdaq slipped 11 to 14,021. The yield in the 10-year note, which impacts the fixed-rate mortgage rates out there, which have recently hit 20-year highs, now at 4.26%. Looks like the yield on the 10-year note is at a 2-week high. Checking the cryptos now, we see a Bitcoin up about $50 at $25,757. Ethereum up 2 at $1,631. And Doge at the moment at 6 cents. And now the latest news for you here on 790 KBC. It's Frank Mottek here now, and I'm not exaggerating when I say this. QC Kinetics can change your life. You can live again without that chronic joint pain and without drugs or surgery. QC Kinetics is advanced regenerative medicine. They take your body's own concentrated healing properties and put them right into your joint to restore and repair that damaged tissue that's causing all that horrible pain. The patient satisfaction reports are absolutely astonishing. Finally, a real alternative to the old ways of dealing with pain. And unlike surgery, there is no downtime with QC treatments. If you have constant pain in your knees, hips, shoulders, or back, you need to call and get a free consultation from the medical professionals at QC Kinetics today. Imagine this autumn moving around pain-free, doing the things you love again, walking, hiking, playing with your grandkids, you name it, folks. Call QC Kinetics and see how the latest advances in precision regenerative medicine can attack your pain and bring you lasting relief. QC Kinetics in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. Call now, 213-997-PAIN. Again, that's 213-997-PAIN. Mottek On Money continues here in 790 KBC, as always, standing tall for small businesses, that is. And joining us live now is who served as administrator of the Small Business Administration under President Trump. He also just co-authored a new book titled Underserved, Harnessing the Principles of Lincoln's Vision for Reconstruction for Today's Forgotten Communities. Chris Pilkerton, thank you very much for taking the call here, and thank you for your service to the United States. Of course, the SBA, such an important force here in the U.S., empowering entrepreneurs and small business owners with resources, which you led during a critical time. Congratulations on your new book. And first of all, give us your view of the economy at this moment and what's happening with small businesses these days.
Frank, thanks for having me. It's great to be with you again, and thanks for everything that you do to support small businesses. You know, I think I hear it a lot from small business owners. Number one, as your last guest was talking about, impact of inflation, right? What are they going to do with respect to hiring, investment in their own business? And obviously that's impacting the kind of capital they can access through the banking system. And then we're also hearing things around overregulation and then the tax uncertainty. You know, remember the tax bill in 2017 had a great impact on small businesses and a strong economy. But now there's that tax uncertainty of how they're going to be able to move forward and invest in their businesses. So I think there's a lot of headwinds for small business right now. But that's one of the reasons we wrote the book, to demonstrate that, you know, we've been in these situations before, and it really takes time and a focused approach and focused leadership, just like President Lincoln had, to really move the country forward.
Thank you for reminding us about that, and tell us about some of the big takeaways in your book, and how did Abraham Lincoln turn things around during that critical time in U.S. history?
So at the end of the day, you know, President Lincoln was really a small business guy. Remember, he was born in a prairie and self-educated. And when he was looking at how he wanted to approach Reconstruction, of course, he wanted to address the inhumanity of slavery. But he had a real practical economic view of, once the peace was made, about the dignity of the actual labor itself. And this goes back to the idea that, you know, he championed the Morrill Act, which was actually the land grant act that led to state colleges and universities and important technical skills and agricultural skills. So he really had this vision of a, you know, rising tide for the entire country. He had this vision of something actually that he talked about in one of his very early campaigns. It was a city called Huron. It wasn't a real place, but it was just this idea of bustling trade and, you know, opportunities and wages for laborers and things really that would move the country forward. And unfortunately, because of his assassination and failed leadership from President Johnson, folks like President Grant, who did some great things, weren't able to realize that vision.
Having led the Small Business Administration, what role do you think government should play in promoting entrepreneurship and small businesses?
So what we write about in the book is the fact that conservative thinkers have always talked about underserved communities really needing to be a critical part of any economic analysis. But some of the liberal policies that have been out there have really forced people to decide between, the limitless opportunity of America's capitalist economy versus a ceiling of whatever federal government benefits they could cobble together. The government really plays a role, but it shouldn't play a role of stifling ambition. And so what we're proposing is a czar for underserved communities. And really the idea of that is taking all these disparate programs, many of which have just been bloated with billions and billions of dollars over the years, and put it under one person where you really can minimize redundancies, allow these deregulatory opportunities to be identified, and limit some of the bureaucratic challenges. And at the end of the day, it really needs to be a bipartisan effort because, as small business and these underserved communities really are bipartisan issues, and it's about time that we really focus on these.
Certainly, and access to capital is a big part of all this. Capitalism without capital, certainly no fun. Certainly the lending environment has changed since you were in office, and the rates as high as they are now, inflation also at a 40-year high, it's getting tougher.
It absolutely is. It's tightening up, and I hear things from small businesses as well, just about theft and crime, and that's a whole new component. You see large companies like Dick's Sporting Goods having to talk about that and disclose that information in their public filings, and it's gotten to the point where even crime is becoming a risk disclosure for public companies, and it certainly isn't helping the hiring opportunities for workers in these small businesses.
Right, euphemistically called a shrinkage in those reports that we've seen recently.
Absolutely, and it's a shrinkage of the economy. There's no doubt about that.
Right, shrinkage of the inventory because of shoplifting and shrinkage of the economy as well. And getting back to your book here, anything else that you'd like to highlight? Certainly, President Lincoln commanding tremendous respect. I know President Reagan often referred to him, and so give us some thoughts here to motivate the entrepreneurs here in the audience.
I think one of the great lines that we were able to research was one of Milton Friedman's lines that governments never learn, only people learn. And those are the people that are running those small businesses every day, and they know what they need. And the idea of having this czar for underserved communities is to really open up the opportunity for one person, one office, to hear what programs are working, what isn't working, and at the end of the day, produce data and outcomes where they can actually prove what programs work, because that's what small businesses do. They produce data and outcomes.
Fast forward to President Trump's time in office. If he does become reelected, would there be such a czar? And what is the outlook for the kind of czar you're proposing here?
So what we're proposing, we've had a lot of conversations on the Hill about it. My co-author, Jaron Smith, spent a lot of time working for folks like J.C. Watts and Mike Pence, and a number of other, Tim Scott, Jim Jordan, a lot of luminaries in the Republican Party. And going back to the idea of looking at some of those programs that we implemented during the Trump administration, I mentioned the tax bill, things like opportunity zones, Pledge of the American Workers, USMCA trade agreement. A lot of these efforts were bipartisan because at the end of the day, they were supporting these underserved communities. And what President Trump did, which was very unique, was he created something called the White House Opportunity and Revitalization Council, which was made up of about 13 or 14 cabinet heads, not deputies, not, sub-assistants or what have you. It was the cabinet heads, because underserved communities and opportunity revitalization was really at the center of that. So we feel very confident that in a Republican administration, something like this can move forward in a bipartisan way.
Chris Pickleton, who served as the administrator of the Small Business Administration under President Trump and just co-authored the new book. Again, it's titled Underserved, Harnessing the Principles of Lincoln's Vision for Reconstruction for Today's Forgotten Communities. Chris Pickleton, thank you again very much for taking the call live with us here tonight.
Always great to be with you. Thank you, Frank.
Thank you very much. Look forward to speaking with you again soon and get your views on things here. Again, we stand tall for small business here on Mottek On Money on 790 KBC. Friends, are you looking for legal help you can trust? Look no further than attorney Clark Fielding and the Fielding Law Team, your go-to destination for top-notch personal injury legal representation. Fielding Law understands that life can take unexpected twists and turns. You need a strong legal team to stand by your side. If you've been hurt in an accident that was not your fault and need help with a personal injury claim to obtain justice, Fielding Law is here to fight for you. Accidents happen, but you don't have to face the aftermath alone. Fielding Law's experienced attorneys are here to guide you through the legal process and ensure you get the compensation you deserve. Medical bills piling up, lost wages due to injury? Don't worry. Fielding Law specializes in personal injury cases and works tirelessly to recover your losses so you can focus on healing. The Fielding Law Team has a proven record of success. They've helped countless clients secure fair settlements and win in court. You can trust Fielding Law to provide you with the best legal representation possible. If Fielding Law takes your case, Clark and his team of sharks will personally work with you, fighting hard for you to receive all the compensation the law allows. Call Fielding Law for a free case evaluation. It costs you nothing to get your honest opinion. And do what I did. Put Clark Fielding's number in your phone under the word accident. Call 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. Car-conscious Southern California, good evening. Prices have finally begun to soften after an historic used car spike throughout much of 2021, but they remain higher than at any time before 2020 when the pandemic threw the global economy and supply chains into long-lasting turmoil. According to Consumer Reports, rising interest rates have only added to the expense faced by buyers these days who have to finance because they'll end up paying more over the life of the loan. Right now, the average price of a used car hovers around $27,000, with the average interest rate on a used car loan at about 11.7%. Joining us live now to tell us exactly what's happening out there in the real world in the car business is Phil Airy, Vice President and General Manager at Budget Car Sales and Rental based in Norwalk. Phil, thank you very much for taking the call live with us here this evening.
Certainly, Frank. How are you?
Fantastic. Always loved your updates when I heard you on with the Leon Motorman Kaplan over many, many years. So it's great to connect with you here and take it from the top and give us the real on what's happening in the car business these days.
Well, as everybody knows, when this pandemic hit, that turned everything upside down. So that caused major shortages in the car industry, which drove prices at the highest level since we've seen in many, many years. So basically, people are now looking to see what they can do to find a car at a good price. And, people with these new car prices averaging about $48,000 and a used car pricing, as you were talking about, at almost half that, people are looking more towards the used cars now because the new car pricing, it just is getting out of control.
Certainly with inflation so much an issue these days, where are the bargains these days?
So we're looking at a large amount of program pre-owned rental cars and lease returns coming through now that are really looking at a very low price compared to what the new car prices are. Rental car companies use tremendous amounts of cars every year, and they have to turn them over every year. So that's basically creates a great vehicle to repurchase for a consumer and save, quite a bit of money over a new one.
Certainly. And what about the warranty on something like that?
So warranties are still transferable to the consumer. So that's another good point to bring up, because when you're buying a pre-owned vehicle, many consumers might think, about this warranty, and the vehicle comes with the remainder of the factory warranty. So it is another plus when you are buying a pre-owned car that you still get the factory warranty. There's no cost to the consumer. So not only can he save thousands of dollars versus a new car, he still gets the warranty and the guarantees.
All right, that's a very important point. And one of our top stories tonight is that oil prices have hit a new high for the year, and gas prices coming along for the ride once again. Are people who come to you now looking for a fuel economy again, or going electric? What's happening in the real world?
I see that both. I see people are looking for fuel economy as well as electric. Electric cars are becoming more and more popular, and rental car companies are starting to put those into their fleets. Which, when we're done using them, turn out to be great cars to repurchase, saving customers, again, sometimes 20-30% off of what a new car costs. As we know, cars are not an investment. They don't go up in value normally. They go down. And we see the trend now as they are starting to come down in price. Dealerships are getting more inventory. They're able to not charge over sticker price. Consequently, that gives the used car prices down as well. So the difference between the new and the used car pricing, there's a big gap between that now, like it used to be.
Right. Of course, Tesla gets a lot of the attention in the EV world. What are some of the choices there at your place as far as electric vehicles go?
So the rental car companies have made deals with Tesla. We're putting Teslas in. We're pretty much putting all the manufacturers' EV cars into the system. So there's a sprinkling of all of them, from Tesla to Nissan to Hyundai to Ford. They're all getting into the rental car system now.
All right, and certainly just given the price difference between new and used, anecdotally, what is the difference, and are more people going to gently used these days?
I do see people now looking and exploring into the gently used vehicle because, again, the price of the new cars are significantly higher. For instance, we're bringing some Nissan Leafs currently that we're stocking in here. And with vehicles like the Leaf that we have a few of them in stock, some of them as low as 1,000 miles, and are going for $10,000 less than what it sold new for. And that's for a 2023 model.
All right, and then what about on the financing side? We've certainly have seen the interest rates tick higher in recent years with the Fed doing what it's doing and benchmark rates moving up. How's the financing looking now?
So that's another issue that we all are used to, are getting used to now with these rates that are going up. We see that the rates are kind of stable right now for the last several months. We think that they're still going to be for the average used car rate. We have banks that'll offer up financing in the 6.5–7% for used cars. New car rates will definitely be a little bit less. However, the cost difference in savings outweigh going into a new car just to scoop up that new car financing rate.
All right. And what's your guidance? Should people try to get prearranged financing when they come to you, or what's being offered there now?
Well, budget deals with many lenders, so we're able to offer on-the-spot financing, so a consumer can come to our lot and have everything right at his fingertips. We can give him the best rate. We also take trade-in, so it's a one-stop shop. So we can provide the whole start to finish when you come to the lot.
All right. I remember when I first visited Los Angeles years ago. Of course, it had to be a Mustang convertible. What are some of the hottest cars that you are selling these days?
So we see a huge uptick in mid-size SUVs, full-size SUVs, and trucks. SUVs seem to be extremely popular, and they have been going up over the last several years over the cars. The sedans, the SUVs definitely are more popular at the moment.
Which ones? Which ones are selling?
So Honda CR-Vs are good. Pretty much every manufacturer. You've got Kia that's got a great SUV, the Sportage. You've got Ford with their Escapes. You've got Chevy with the Equinoxes. For the midsize SUVs, these are all across the board really excellent choices for midsize SUVs.
Sounds terrific, Phil. And for anyone that wants to check out where you are right now, what's your location there?
We're at Budget Rent-A-Car in Norwalk, and we're right off the 5 freeway, so we're centrally located right from about 20 miles south of L.A. and 15 miles north of Disneyland.
Can't miss that big sign, right?
You can't miss that big sign. That's the largest Budget Rent-A-Car sign in the world.
There you go. Well, Phil, great to connect with you. Thank you very much for joining us live here this evening. That is Phil Airy, the Vice President and General Manager at Budget Car Sales and Rental based in Norwalk, live with us here this evening on Mottek On Money on 790 KBC. I'll be back again tomorrow evening at 5 o'clock. You can also catch the Mottek On Money podcast on demand at kbc.com. This is Mottek On Money on 790 KBC.